It's great to be here with you all. Bruchim habaim, tov le'ot otchem. And I very much look forward to talking to you, but I think we have a brief video which the G8 task force prepared. So could we have the video, please?
Your money. You earn it, you buy things, you put a little bit away. You put it in a bank or in a retirement fund. Maybe a little something on the stock exchange. And then those clever people invest it in things to make you more money. Problem is, more money isn't fixing certain problems. In fact, it's creating some of the problems we got. Well, guess what? There's a new money game on the table. People just like you and me are making money, but they're also doing good. They're investing it in businesses and charities that are doing good work in their communities, in retirement funds that put their money into schools and a future for our kids. And even those clever investor types, they're partnering with governments to fight the big problems more efficiently. It's doing good and making money at the same time. But don't take my word for it. Political leaders, they're all over this thing. Tech entrepreneurs, you know, those eBay types. They're hardwired into this. The Pope's giving it his blessing even. Big businesses and big investors are giving it a go. Think about it. What good is more money if it isn't doing something good? The new game is called Social Impact Investing, and you can join in too. You just need to ask the right people the right questions. Questions like, where are you investing my pension fund? Or, can my savings support my community or my kids' school? Or how about this one? Can my big investments also do good as they do well? So why not be really clever and turn your money into real change? Social Impact Investing. It's the future of money, for good.
So when we started the G8 task force, which was created by David Cameron, we set about not putting together a report, we set about really creating a revolution. And the revolution is well underway. Now, why was a revolution needed? A revolution was needed because across the world, if you look at social issues, instead of receding, social issues are actually deepening and extending. My generation's slogan was equality of opportunity. But what we've realized over the last 30 years is that actually equality of opportunity in most of our societies is just an empty phrase. If you're born into the wrong family, if your parents are unemployed, have a drug habit, or whatever, equality of opportunity is just an empty phrase. And people get stuck behind permanently. And governments are having to cope with this, and governments are realizing across the world that the gap between the amount they can spend and the need for social services is just going to get bigger and bigger and bigger. If you begin to look at aging populations across the world, the prospect of the aging poor comes on top of this gap. And so governments are throwing up their hands and saying, how are we going to cope with social issues? And they're realizing, without necessarily expressing it always, they're realizing that they don't have the capacity to innovate, and nor do they have the capital with which to cope with innovation, with the risk of failure, and with the extension of new ways of delivering social services. And so the British government in the year 2000 asked me to chair a social investment task force to look at the fact that just driving economic growth does not solve social issues. In fact, what we've realized over the last few years is that economic growth creates inequality, extends inequality. Instead of closing the gap, it actually increases the gap. And we came out with a number of interesting conclusions in 2000. The first conclusion was that it's very odd that the only part of our financial system, apart from government, which is tackling social issues directly, is the social sector, the third sector, as it used to be called, the charitable sector. And yet, when you look at the charitable sector across the world, it's got huge numbers of people in it, In the UK alone, it's 800,000 people working. In the United States, it's 9 million. Across Europe, it's 11 million people working in not-for-profits. And yet, they have two common characteristics. Virtually nobody has any money, and virtually nobody has scale. And I started to ask myself the question with my colleagues on the Social Investment Task Force, why is this? And we began to realize that the reason this is that while we've been able to respond to the needs of tech entrepreneurs for risk capital by creating venture capital funds, bringing limited partnerships into being with a 10-year life, creating asset allocations through changes in regulation, we've not found a way of connecting social entrepreneurs to the capital markets. We've found a way of helping people who want to take risk and do ambitious things to make money. We've not found a way of funding those who want to help others, like many of you in this room. And so the challenge that we set in 2000 was, how do we connect social entrepreneurs to the capital markets? Now, 15 years later, we can see how we connect. We connect through measurement of social impact. Up until now, philanthropy has focused on the act of giving, not on achieving social outcomes. We've all felt generous in giving money to organizations that were helping people weaker than ourselves. But it's been a little bit like giving money to the beggar in the Bible. Let the beggar worry about what to do with the money. But when we're contending with major social issues, when organizations are trying to innovate and to use professional ways of improving people's lives, we have an obligation to make sure that the money that we provide achieves the social outcomes that are intended. The big breakthrough came, in my view, in 2010 with the development of the social impact bond. We went to the Ministry of Finance in the UK. It's very interesting in the context of what Robert was saying, because when we went to that first meeting and we said to the minister, look, we think we have a new way of helping deal with prisoners who go back to prison within 18 months. 2/3 of young prisoners do so, as many of you know. How many of you don't know about social impact bonds? You all know, fantastic. So when we went, which is a big change, I have to tell you. Well done. So when we went to the minister and we described the social impact bond, the minister banged the table, Jack Straw, and he said to his officials, I know that nothing should ever be done for the first time, but we're going to look at this seriously. The first social impact bond proved that in the case of prisoner reoffending, you could measure social outcomes and you could tie them to a financial return. There are now, in the UK alone, 24 social impact bonds. In the United States, there are half a dozen. In Australia, there are a couple. There's one each in Germany, in Belgium, in India, and so on. In Canada, many countries across the world. And what people are beginning to realize is that in addition to traditional philanthropy, which will go primarily to areas where you cannot measure outcome, there is the ability, as Robert and Abigail were both saying, there is the ability to begin to create a balance sheet for not-for-profits. There's an ability to begin to define an allocation for investors, which says you can provide quasi-equity to a not-for-profit and you can make a return. You can provide uncollateralized debt. You can provide collateralized debt. You can provide social impact bonds. And you can make a decent return out of it. If you can make 7% uncorrelated return out of a diversified portfolio of social impact bonds, how much of an average portfolio should be in that area? Well, the answer is 5 to 10% or more. Huge amounts of money. And again, as Robert was saying, we're beginning to find ways of bringing people who have a desire as investors to do more than just achieve a financial return. And after all, $46 trillion of investor money have signed up to the United Nations Principles of Responsible Investment. We're beginning to prove to those people that this is a worthwhile way to invest, just as we proved a generation ago that it was worthwhile to invest in venture capital and in private equity. The drivers that we defined in the task force, and we published, by the way, 14 reports, one for each of the G7 countries plus Australia, separate reports on the subject of impact measurement, asset allocation, international development, and profit with purpose businesses, and a report for policymakers. So if you go to socialimpactinvestment.org, you will find all of those reports as well as this video. What we said basically was, look, if in the 19th century and before, investors measured financial return, and if in the 20th century they measured risk and return, in the 21st century we're already measuring risk, return, and impact. And that's why we're finding a lot of pushback for organizations such as those described in Robert's excellent video, which are getting pushback because although they're making good financial returns, they're having a very bad effect, either on society, through their supply chains or other ways, or on the environment. That process has already begun. It's being driven, as Abigail was saying, also by a millennial generation that wants more meaning than just making money. I see a constant stream every day of young people who are coming to me and saying, I want to do something to improve the lives of this particular segment of the population. I want to do it through a not-for-profit model, or I want to do it through profit with purpose. If I'm going to use a for-profit model, I want to lock in my social mission by becoming a B Corp, which allows you to go after both social and financial objectives. And I want to innovate, and I want to scale, and I want to raise capital just like a normal business does, and bring a revolution about in the way that we deal with social issues. Now, why are we all here today? Not just to talk about impact investment. I'm going around the world talking about impact investment. I was just in Thailand, I was in China, I'm going to Japan. Everybody's interested in it. We're here today because Israel presents a major opportunity for impact investment. The innovative drive, the ability to improvise, the social consciousness, all of those things come together in Israel in ways that you don't find in other countries. We are working on really innovative social impact bonds, for instance. Social finance here is working on a diabetes prevention social impact bond. 300 million people across the world are pre-diabetics. 400 million are diabetics. 12% of national health expenditure across the world is on issues related to diabetes. If Israel can launch a $6 million diabetes prevention social impact bond, and it looks like it's going to work here, it'll be repeated across the world. We've got another social impact bond here in Israel on dropout rates from colleges and universities. When you look at dropout rates, Israel's numbers, 13% dropout rates, look like the same as the OECD. But when you begin to look in detail at dropout rates for engineering, there's a 56% dropout rate from tertiary education in engineering. And Israel needs engineers. The tech revolution needs engineers. Israel's leadership in tech requires engineers. Why are people dropping out? Many are dropping out because they come from weaker strata of society where the pressures to drop out are great and where the financial pressure to stay in is also very great. We're looking at social impact bonds for the Haredim to get into work. for Arab women to get into work, for kids who are studying maths with only 4 subjects instead of the 5 that are necessary if they're going to have maths built into their future career. Everywhere within Israel, you're finding social issues that are capable of being addressed through impact investment. But just as with venture capital, you need structure for this to become a real sector. And structure means you need funds and you need incentives from government. I'm delighted that the government announced yesterday the award of 2 social impact funds to IVN and to Dualis. That is a very big step forward. The Bridges team, which I'm delighted to say I helped to expand both in the UK and in the United States, manages today £500 million, is interested in getting going here in Israel, and the Portland Trust is supporting the launch of a Bridges fund to invest in the poorest parts of the country and in the poorest populations, in the same way as Bridges UK has done. Deliver returns of 10 to 12% net IRR. In the UK, we delivered 15% net IRR plus. And to create, through entrepreneurship, wealth and role models in poorer communities. That fund, I hope, will be between $50 and $100 million. But most importantly, we're talking to government about creating the ecosystem to support impact investment, in the same way as it created an ecosystem to support venture capital and technological innovation. We're looking at taking unclaimed assets from the Apotropos Haklali, the general fund, which takes capital that does not belong to specific members of society. In the case of the UK, that money came mainly from bank accounts that had been separated from their owners for 15 years or more. Big Society Capital, the first social investment company to be created of any size, got £400 million of unclaimed assets in the UK. We want to do the same here in Israel. We're talking to the government about extending the incentives for individuals who invest in impact investment to equal those that are given for oil exploration and for film production. This would enable an investor to offset an investment against their revenues and to save income tax. So we're working with the Israeli government to create the necessary ecosystem. I believe that if we concentrate now across the world, step by step, on creating replicable ways of addressing social issues that matter, if we begin to see the innovation come through that we saw in tech, then we will improve millions of people's lives. One of the chapters in the G8 report is the first trillion. I believe that this area is going to be huge. And for all of you who are here today, there's a way of participating in it, both in your home country and here in Israel. Adam Smith talked about the invisible hand of markets, but he was actually much prouder of a book called The Theory of Moral Sentiment than he was of The Wealth of Nations. And the theory of moral sentiment was all about empathy and how individuals are motivated to help others out of a feeling of empathy. What we say in the G8 Task Force report is that impact investment brings the invisible heart of markets to guide their invisible hand. Thank you very much.